Okay, welcome back, guys. We're going to look at these markets. Lots of things going on today, so it's important to point out what I'm seeing. I think it's important to understand the dynamic of the market that we're in. So let's get right into it. If you guys find some value, give me a thumbs up. I do appreciate that. Let's get right into the Nasdaq futures. So today, obviously, my general read on the market today is the market is expecting inflation. That's what essentially the market is telling me today. Now that could obviously change tomorrow, but today that's what we're seeing, but not across the board. And that's why I want to point out a couple things. Obviously, inflation means that the dollar is losing value, and everything basically priced in dollars will move higher. Commodities should move higher. Gold should move higher. Stocks can move higher. And then bonds, which are promises to pay future dollars, will move lower. And so that's what I'm seeing in the market today. Nasdaq futures is basically trading right up here. We still have this breakdown candle. Basically, if I go to the daily, this was basically a breakdown candle right there. That's a bearish engulfing. We don't have any follow through yet. There's no real confirmation though. So today they're obviously it's bouncing back and kicking back. You could still use this breakdown area as potential stop level. So a break above that, if it can close much beyond that, a daily close, then I would look at stopping out on any trade that you took on a Q short. But as of right now, it's still intact, so this could be just the kickback rally before we head lower. I'm getting mixed signals, so I'm not, today I'm not so sure as if this breakdown candle is going to hold and we are going to go lower or if we're going to go higher. Obviously, the trend has been very resilient and it has been up, but I see here on the futures this rising trend line right here. We broke that trend right there pretty impulsively. And this looks like a kickback rally as of right now. So, I think if I had to weigh one or the other, I'd probably say lower. But again, mixed signals. So take it with a grain of salt. I don't think it's an all-in short period or time to just load up short. I think there's, we need a little more follow through. Here's the SPY futures. Basically had another false breakdown. So here's your bearish rising wedge. Had a breakdown over the holiday period. Had another breakdown, but it's recovered it. So two false breakdowns. That's the nature of this market. There's a lot of whipsaw signals going on. It's whipping all around, and that's to be expected. You've got all kinds of liquidity, and the markets are really manipulated and distorted by the Fed. So they can do a lot of different things. As of right now, we're above the upper end on this bearish rising wedge. Low probability area though. Typically when you're way up here on a bearish rising wedge, yeah, you can run a little bit higher, but oftentimes that's faded and it fails. Let's look at the small cap futures. Here is this bearish rising wedge here in the Russell 2000 RTY small cap futures. One breakdown there, second breakdown. This looked pretty good. Then they ramped it up pretty impulsively and have since recovered that bearish rising wedge. So we'll see if there's any follow through or if this is the top and it's now going to roll over. Again, mixed signals. So here's the triple Qs, and you have this breakdown candle right there. Basically right there. We're above that now. You can see that we broke above it, kind of came back down to test it, but we've held and we're continuing to get higher prices. So, I'm questioning if this one's going to go lower or if it wants to do a full back test potentially of this trend line right here. Looking at the daily chart on the Qs, still have negative divergence. So this price action that we're seeing is still a divergent high. But again, divergence is not necessarily a reason to short. We had a sell signal right here. So that is the reason to potentially short. But the negative divergence just tells you a trend reversal is possible. I see this breakdown candle, and as of right now on the daily chart, we haven't taken it out yet on the daily close. So look for, let's see how we close the day. Maybe we close it right there at resistance around 315.10. Look for tomorrow maybe for it to fail. That's what I'd be looking for. SPY, yeah, but here's the thing. The SPY is well above its breakdown candle. So that was a breakdown candle right there, a bearish engulfing, but it's since pretty much been negated because of the recovery. So at this point, I would still look at going to the weekly chart. I would look at this major trend line going back to 2009 to be the major resistance. And we're almost there. You know, we're right below it. We're probably about 2%. Let's take a look. Yeah, about 1% or so from that major trend line reversal. Last time we hit that trend line was right in this area, right here. And, you know, there really wasn't much more upside. We were stopped cold and then sold off into the COVID crash right there. So we'll see if, you know, maybe when we get there, we might actually pop above it. We might never get there. Typically, when everyone's looking at a trend line, you either pop above it or you don't get there. We're so close at this point. If we get to it, I think we're going to probably recover it a little bit. Small caps. So we still have negative divergence. You can see right here on the daily chart. There it is, still intact. The PPO is still, you know, still below. We still haven't had a bullish crossover. Obviously, it looks like it wants to cross over. But if you look at the chart, let's go to the hourly chart. We're pretty much right there at resistance, which is the apex of what this wedge really was. If I roll out here, you can see this was a bearish rising wedge. We broke down, did a kickback rally, pretty much to resistance. They overshot it a little bit, but for the most part, it's right in that area. So this is where it should get rejected. Doesn't mean it's going to, but this is where it should get rejected. So look for that rejection. If you see it, then that's likely going to stick as a near-term top, and we're going to actually see a meaningful move to the downside. That's what I'm looking for in this thing. You know, we're not seeing it yet, so you gotta have to wait for it. But let's see how the day closes. Let's take a look at volatility. So with the market up as much as it is, you'd expect that volatility would be probably down more, but in reality, we're just still hanging in there on volatility. Let's look at the daily here. You can see we're just kind of basing out in this area right here. We're down towards the lower end of the range. Support on this UVXY is around 1030. We're down at the lower edge, but we're still, you know, there's been no technical change in this volatility chart. We still have bullish divergence. It continues to build, and we're just at the lower end of the volatility range. So again, you know, it's at support with bullish divergence. You know, it's likely to have a trend reversal, but we obviously haven't seen it yet. So we'll just continue to watch it. The way I'm playing this volatility range, that it's been pretty choppy. So yesterday we spiked up. I loaded up on volatility before that spike. I sold into some of that strength because, you know, I want to be able to hold a position to catch a bigger move. I can't have a huge position in volatility. So as I get some strength in volatility and get some of the trades right, I take some of that profit so that it helps. You know, it helps me stay with a smaller size volatility position for a longer period of time. Now, if we get the breakdown in volatility, we start to actually break down. Look for a break, but look for it to recover. So if it's going to break down, look for a recovery of this 1030. If it can't recover that, then volatility is probably going a lot lower, and that means the markets are likely going higher. Okay, so this is where the real action is today, and that's in the bond market. The TLT, which is the long-term Treasury bond ETF, the long end of the curve is getting massacred, and I'm really interested to see what happens here because there's potentially going to be some big implications around this. You can see the TLT today sold off another percent. At one point, it was down, I think, about 1.5%. And that means the long end of the curve is interest rates are rising. And then the short end of the curve, the Fed is keeping that pinned. They can control that through their monetary policy. So we're getting a steepening of the yield curve. And that often takes place when the market is seeing inflation in the future. That's kind of what's going on. The market right now, especially the bond market, is sniffing out inflation. So I'm looking for So I'm looking for inflation hedges, and that's why obviously I own the gold mining stocks. Those are inflation hedges, and those seem to be doing okay. Here's my gold mining kind of stocks. They're not doing a whole lot today. They're not giving me a ton of signals. Some are down, some are, they're kind of flat. So look for what happens here in the bond market. Do they step in and buy the TLT right here? One thing to point out on the RSI is we had negative divergence. It's still there actually. So, on the day, we'll have to see how the day closes. There still is, sorry, not negative, but bullish divergence. And this is actually a divergent low. We'll see if they come in and buy the bonds up, keeping that bullish divergence intact. If that takes place, and this was likely the low for TLTs, and these are going to go a lot higher. Another thing to keep an eye on, and that's the level. I'd look for a recovery of this 154.40 area. That seemed to be kind of a support area, and it broke down just in the last 2 days. If it recovers that area, that's likely going to be a false breakdown, and I think we're probably going to get a move to the upside. Another thing to keep an eye on is the dollar. Looking at the dollar here on the daily, it's not an impulsive breakout on the dollar, but on the hourly, we've slightly broken above this bullish falling wedge right here. Not super impulsive, so I'm looking for maybe a little bit more impulsive move. But if the dollar continues to rise, the market will most likely fall. And that's why I'm getting some mixed signals, because the dollar's up today, and yet bonds are down, and we're seeing and gold's not doing that great. I mean, if you look at gold bullion here, it's hanging in there, but it's not up. It's basically flat. So we're seeing the market saying, okay, inflation's coming, but it's not across the board. We're not seeing it in gold. We're not seeing it in the dollar. So that's keeping me guessing, basically, in terms of what's going on. It seems like it's a whipsaw signal, like this might be a fake out, and the market's about to come down. The dollar's about to, potentially move higher. Gold could come down. So I'm, when I don't know what's going on, I just kind of take a step back and don't really make any moves and really try to look for further clarification from the markets and the charts. XLF here. So one thing to point out is we had this gap on the COVID crash right there. That's where the gap really started. We've now filled that gap. We actually filled it yesterday. They're popping above it today. So, but look at the candle. I mean, you're getting gap up. Yesterday was relatively strong, I would say. There's nothing to, that's a pretty strong day yesterday. Today they're gapping up. It's pretty weak volume, and it's kind of looking like a doji. So we'll see how this plays out. I'm not seeing like across the board strength in the financials. If we flip over here to my financial things I'm watching, you can see they're, Citi, they gapped it up today. It's been selling off pretty much throughout the day. JP Morgan, again, these are doji candles, which show potentially the top. What you want to look for when you see these doji show up is the next day you want to see follow through or confirmation selling. So this is a doji. If we close like this, that's a potential reversal candle, and then look for more selling tomorrow to confirm that this was the top, basically. So that's kind of what I'm looking for. And looking at Citibank, going back here, still have negative divergence on the daily. We've got a doji. So again, shows me that it's potentially the top. I need to see the price action confirming that now. So for me, what I do, I don't add on days like this to a trade. If I'm short, like I am short Citibank, still short, I'm not going to add on a day like today. When I start to see the trade work in my favor and confirm, that's when I'll start adding. Until then, I just look for, confirmation or for potentially areas to start to lighten up and exit out of the trade. Oh, let's take a look at this FedEx. This continues to work to the downside, so not everything's going up. I think for the most part today was what I'm noticing in the market is there's a lot of jumping around from kind of broad-based stocks, and then they'll sell the Fangs, and then the next day they'll buy the Fangs, and there's this kind of, it's kind of like whack-a-mole basically. The Fangs go down, the other market goes up, the rest of the market goes down, the Fangs go up. Today I would say it's pretty broad-based strength today. There's relatively strong breadth in the market, and so you can't knock it to the downside. Today is a pretty bullish day, but FedEx still selling off, going lower. To me, I think FedEx is heading down to this 184.55. It's pretty extended to the downside at this point. You see the RSI down here all the way at 23. There's no bullish divergence on the daily, but it is pretty extended. You look at the hourly. Yeah, we don't have bullish divergence in the hourly either. So maybe we get a slight move up, then we sell off a little bit more, putting in some bullish divergence. Because I would expect some sort of a bounce after, just straight selling in this thing for a while. General Motors, I'm short this one. This still looks okay as a short. Had a little bit of a bounce recently, but nothing too strong. Today it's only up 0.5%. Looks like the selling's still there. Kind of topping out right in this area. I think we had lower. What I'm looking for in this one is a drop down to the trend line down here. This is kind of the March trend line. So I'm looking for a move down to there. And, at that point, I'll likely cover the trade. And then the next sell signal would come on a break of this trend line. Tesla. All right, so this thing, obviously just a rocket ship. It's just going up no matter what. That's it, basically. There's no... if I look at the daily, yeah, you have some negative divergence. It's just starting, it could burn through it. Much more upside from here, and it's going to burn through it. On the PPO, you had a breakdown, but now you've got another bullish crossover right there. So again, this thing just continues to go higher to pretty much extreme valuations. It's going to come down, like, at some point in time. I mean, you could almost look at this and guarantee that if you took a short here, you're going to be profitable. You just have to be willing to, you don't know when it's going to come down. So you might go into some heavy losses first before being profitable. So again, this thing's just continuing to move higher. There's no real sell signals on Tesla. So it's one of those things where it's just the valuations are out of control, but the stock keeps going up. NEO, this one still looks good for a short. Obviously, when you take a short, as when you take a long position, you typically, it doesn't go in your favor from day one. You look for a technical setup, you take the trade, and then you wait for the trade to play out. And that can go against you sometimes. So right now, still kind of moving against the short trade, up 7% today, but negative divergence on the daily, still intact. That hasn't changed. So nothing's changed on that. I think we're still coming down to this trend line, down around $40, depending on when we get there. But I think it'll happen relatively quickly. And then at that point, it's likely going to, we're going to have to see what happens at that point. Zillow Group, this one, still has negative divergence, just continues to kind of walk. It broke the trend. Here's the here's the 2020 trend line. Broke the trend, did a backtest one, backtest area here. We're just getting a little bit of a kickback rally. But again, what I would look for is, does it, can it recover this area right here? And if it can't, then, we'll start making lower highs and lower lows and start the downtrend that this thing is telling me it's going to do. It just hasn't quite started it yet. So this one still looks good as a short. I still like it. Qualcomm, I'm not short this. Covered this one because it's still in an uptrend channel and it hasn't broken. There's no sell signals. So a break of this trend on the daily chart, a break of this lower trend line right there. You can see it going all the way back to the March lows. That would be your next sell signal. Until then, it's an uptrend. Intel, I'm not short this one anymore either. I talked about, it didn't do what I was looking for. So basically, just to point this out, and it was a profitable trade for me, but here's the weekly chart going back to 2009. Here's your uptrend line right there. It's got negative divergence on the weekly. We broke that trend right here. We covered it and then broke it again. So I was looking for continued downside right here. When it started to turn up, it just didn't make sense to be short. And now it's recovered it again. So I talked about that. That's pretty bullish. I think a double recovery in Intel. So not something I'm looking to short. You could be long it at this point, but it is kind of a chop zone where it could break back down again. So I'd be looking for as of right now, if I had to pick one side or the other, I'd probably want to be a bull and be long on this thing, just because of this double recovery. But with the negative if we go to the daily chart, well, it did have bullish divergence. I did point that out down here. So it did, yeah, I would look to be probably long Intel at this point. And this was a false breakdown or a bear trap. Carvana, kickback rally to trendline resistance. You can see here, this is the range it's been trading in. Pretty exclusively, actually. Had a brief overshoot right here, but then it failed and came back down and sold off. Didn't get down to the bottom of the trend line, and we did another kickback. So that's an objective area to add to a short. Although, the trend is up clearly. If you look at the daily chart, we are moving higher within this bearish rising wedge. I think what I'm looking for, probably before potentially adding to this trade, is a break of this lower trend line down here. Right now it sits about 219. So I'd be looking for, depending on when we get there, some sort of an impulsive breakdown will be, I think, the next sell signal or an objective area to add. It's objective to add up here at the top, but it's in an uptrend, so it's higher risk. And so I'm going to be looking for a break of this trend line probably to add. Negative divergence on the daily still intact. So the technical posture on the momentum indicators is still intact. Nothing's changed. Just a kickback today. You can see Apple here. So we had a breakdown yesterday of the daily chart. So here's the price support coming off the March lows. Several reactions there. Yesterday we broke. You can see that's where we closed. Not super impulsive. Today they just popped it right back up. So that's a recovery of that trend line, which is bullish and means that likely there's some more upside in Apple. And I don't know where. Could, run up to here, could go a lot higher, could fail tomorrow, could fail into the close. We don't know. But as of right now, above support. So until you see that breakdown, impulsive sell signal in Apple, that you're probably not going to get a breakdown in the Qs until you see a breakdown in some of these Fangs. Microsoft, again, just big sideways drifting action. So we're just seeing it kind of drift sideways. Amazon's the same deal, just kind of sideways. Today it's up, tomorrow was down, it's just sideways. So this hasn't really picked a direction. It's been stuck in this range really since July. So quite a while, it's really gone nowhere. Apple's gone up. That's been, more of one to go up, but we do have the potential for a double top. So what I'm looking for is, the signal that this tells me it either wants to continue to go higher or a breakdown sell signal in Apple. You get the breakdown in Apple, you're likely to see the breakdown in the Qs. Okay, so just to go back to the dollar, and this is really the key takeaway, I think, for this video is, the entire time everyone's trying to figure out whether we're going to have inflation or deflation. Right now, the market is saying we're going to have inflation. Is that true? Does that does that change? Nobody knows whether whether it's actually going to play out or not. So I think watching the dollar and watching the TLT, kind of the long-term treasury bonds, is going to give us clues into what the market really wants or wants to do or what it's anticipating. The dollar right now has broken out below this trend line right here. And it's a good size, it's a major trend line. So if the dollar moves higher, then bonds will likely move higher, going to the TLT. Then bonds will this is likely a bottom or a buying spot for long-term treasury bonds. If the dollar fails and continues to move lower, gold should continue to do well. The inflation trade should continue to do well. So we're getting mixed signals right now. We've got a dollar breakout and we've got a bond market breakdown. So again, I don't know what that means. I have one, it's kind of mixed signals. So one of those is going to tell us what's actually going to happen. And then I think that's how we'll position for the next trade. So as of right now, I'm going to just leave it at that. There's kind of some question marks. So need some more information and I'll catch you guys on the next one.